Hi, welcome to the first edition of FINtastic Talks in 2023. Let me start by wishing you all a very, very happy and a prosperous year ahead. This year brings a lot of prosperity, good luck, happiness, wealth to each and every one of us. And when we start the new year, and we are starting this with a talk which is on insurance. The reason that is that, as I always tell you, wealth creation starts. The first step of wealth creation is wealth protection, because you have to first protect what you have built, and then only can you build further. So, like if we see that if a person has built a beautiful house, now he wants to start building an investment portfolio, and tomorrow there is a fire in the house and he loses the house, then he's back to zero. Whereas all he had to do was pay a very small premium, maybe a few thousand rupees, to get a fire insurance for his house, and his house would have been protected. Or what we have seen places where some flats and buildings have become uninhabitable. If they had the right insurance, then they would have been in a much better place to be. So it is very important for us to look at insurance. And as we say that we have to start the years by doing things which we are not very comfortable with. So for me, my focus on this year has started with the detox, which I'm doing. That start the year with on a tough note. Same with all of you, all the viewers who are going to watch this talk. Start this year by building up a right insurance plan for you. Make a list of all your important assets, and make sure that you have bought the right insurance. And believe me, it's not going to be expensive. And one of the most important assets is you yourself personally. So we are going to be talking about life insurance with one of the most incredible CEOs of the life insurance industry. So let me welcome Vighnesh to join us today. Vighnesh, thank you for taking out time to be with us on the beginning of the year to give a very strong start to FINtastic Talks.
Thanks so much, Sanjiv, and thanks for having me at FINtastic Talks. It's always a pleasure speaking to you, and I also wish all our listeners a very happy New Year.
And let me tell you one thing, guys, about Vignesh. Although Vignesh leads a life insurance company, but their mid-cap fund is one of the best performing funds, which beats most of the mutual funds in that category and segment. And they are one of the few people which makes mutual fund industry complaint that where they have an amazing single premium, where they've been able to show outstanding performance and actually compare it to all the mutual funds out there. So Vignesh, we'll definitely take a talk on it. Today I wanted to try a new format. That a lot of people have said that 1 hour is too long, and that said a talk which is half an hour, so we can watch it more easily and keep the answers brief. So let's try to do that, Vignesh. Let's try to keep the answers as brief and as crisp and as clear as possible. And so, new year, new resolutions, new attempts. So I'm quite excited to try out the new format today. That whether we can cover the same thing in half an hour that we used to do in 1 hour.
Sure, Sanjiv, sounds good. Sounds
So,
good.
Vignesh, we always like to start these talks by understanding you as a person or you as a human being. So, why don't you tell us about yourself, your childhood, your parents, and then your education, and what got you into the seat that you are sitting on today?
In the spirit, Sanjiv, of keeping it brief, I'll start after the age of 15. I had a normal school life, so I won't talk too much about it. But 15 is 15, at the age of 15 is when I shot up in height and I started taking cricket very seriously. And for the next 7 years, I harbored this ambition of playing for the country in cricket. It culminated, this ambition did culminate, required a lot of hard work and sacrifice, which I did from the age of 15 to 22, which was a time when most teenagers are having a party, and I hated cricket for that. But it culminated in me representing Mumbai in the Ranji Trophy in 91, from 91 to 94. And then when I found out that cricket wasn't getting anywhere, because at that time there was no IPL and there was really no commercial benefit out of playing cricket. You played cricket for the pride of it. I pivoted quickly to, I was always a decent student. I did my management MBA through a premium institute, Narsim Monji Institute of Management Studies. I did the 2-year MBA there, after which I got placed in Standard Chartered Bank. I was with them for 10 years. I was in Dubai for 5 years, and then I came back and joined this company. I've been with the Ageas Federal Life Insurance for about 13 years now. 3 years a direct reportee to the CEO at that time, and I'm going to complete 10 years as CEO of this company very soon. So in a nutshell, that is what my life is. It was cricket for the first 20 years, 22 years, and then my corporate life started.
It's amazing, Vighnesh, amazing. I didn't know about your cricketing career, and to be able to play in Ranji Trophy for Mumbai is amazing. And if IPL was there that time, then probably you wouldn't have been an insurance CEO. You still would have been playing cricket.
Yeah, most definitely yes, because cricket was my passion at that time. I couldn't think of a life beyond cricket, so I was very disappointed when I had to leave cricket and start studying, because all my friends were yet playing cricket, and most of them played for the country in a year or two. So one doesn't know, but no regrets, Sanjeev. I'm very happy with where I am. I'm extremely fortunate to have played Ranji Trophy for Mumbai and after this opportunity too.
Vignesh, I am sure so many people would be envious of you, yeah. From cricket to a CEO of an amazing company. It's an incredible journey. So now let's getting into action. So, there's a question by Ramesh. What are the most critical questions that a person should ask his insurance agent or even broker about buying life insurance?
It depends on what kind of policy you want, Sanjeev, Ramesh. If you take a ULIP, a unit-linked insurance plan, for instance, I think your question should revolve around what has been the fund performance of the fund or the company you want to invest in up till date. You should definitely ask what the reputation and the claim settlement ratio of that company is. Uh, we have a very strong regulator in the IDBI, so I think a lot of basic things are taken care of, and there's a very strong ombudsman by the ombudsman. But you must definitely see what the reputation ratio of the company is, and if you invest in a ULIP plan, what the fund performance has been. If you invest in a traditional plan, what are the kind of returns you get. And I think a lot of companies today are insurance industry is well rated. A lot of companies are extremely ethical in with the way they deal with customers. So I think all the customer dissonance issues which were present about 6 or 8 or 10 years back have now vanished. So I think you should be focused on the brand of the company, the claim reputation ratio, the fund performance of the company, and the general strength of the company.
Yeah, I think these are incredible points. Ramesh, and this is something for you and all the viewers, which I say that whenever you start an insurance discussion, it's important that tell the person that, look, whatever I will be asking you, I'll be asking you on email. Okay, so the first thing is that you put your requirements on email. I need an insurance for XYZ reason. Tell me about the company's claim settlement ratio. Tell me about this. Tell me about that. Will this cover? Will this, my need is this? Will this plan cover this or not? What is the kind of return I'll get depending on the product that you're choosing? One that will do is that it will put the person on the fact that, look, I cannot lie to this guy. I have to tell him the truth. Okay. The second thing is that you'll have to do the homework. He will not just pitch you what he wants to pitch. He'll have to go and do the homework because you have asked him the question. So, guys, if you want to buy a life insurance or health insurance or even any other type of insurance, you need to ask the right questions and ask them on paper. That is very, very important for all of us. So, Vighnesh, next question is by a lady called Muskan. she's saying that there are now a lot of pension plans which are available through life insurance. How good they are, and how do you go about them, and what is your views on them?
I think a pension plan should be in the basket of insurance, in your basket of financial planning, on your basket of insurance products. Pension plans are of different kinds. One is you pay pension over a period of time and then you get the return. And there are also immediate annuity plans. So I think a pension plan is required because India is a country with little or no social security system. So pension is good. It also, and there are some interesting, attractive pension plans at the moment. Also hedges you against the risk of reinvestment in a falling interest rate regime. Your interest is guaranteed. You can choose a pension plan depending on what your needs. But I think a pension plan, it all boils down to how much return you're getting on your pension plan. But a pension plan, Muskan, is essential in your basket of insurance. And the pension plan doesn't mean that you have to take a pension plan when you reach retirement age. You can plan for retirement at a young age. I mean, a lot of we see a trend where a lot of young people are planning for an early retirement, are probably taking a pension plan. So pension plan is an integral, essential part of an insurance basket, and I think you should find a way in your investment stroke insurance basket sometime. And there are a lot of interesting and attractive pension plans in the market at this point of time.
Yeah. So pension is a very important part of the portfolio of this thing. And traditionally, pension plans were only available through life insurance companies. Now you have a national pension system where you have other options, and you can obviously use mutual funds also. So it's all about creating a corpus for your retirement. So you need to understand that how much do you want to create, what is the kind of risk profile, and look at products across the three segments and do the right mix. That's the best way to go about it. Vighnesh, next question is that which I'll quickly answer. Alicia is asking about what is a no claim bonus. No claim bonus is something which is more relevant to the general insurance. It started with the fact that if you don't make a claim, your sum insured goes up. So initially it started with general insurance, motor insurance. Then it came on to health insurance where this was copied. And now it has been copied in term insurances also. That if you have bought a long-term policy and you have made no claim, then your sum insured gets increased by 5-10% every X number of years. So this is where the sum insured is increased without any additional cost for you for having not made a claim. I hope we have been able to explain that. Suraj asked a very interesting question, Vighnesh. Should you buy a health insurance first or should you buy a life insurance?
I think after the experience we've had with COVID over the last 2 years, I think health insurance is absolutely mandatory. It should be the first policy anybody buys, quickly followed by a term insurance. So I think these are two products which I strongly urge everyone to have in their portfolio. Whether you buy health first or term or life insurance, I'll term insurance first. But you should quickly have, especially after what we've been through in the last couple of years. I think health and term insurance are integral parts of one's portfolio. So I think the best time to buy both these plans is yesterday. So please
So I
hurry up.
agree with Vignesh, guys. Health and life are both important, and in life also you need to buy a term insurance, which is the pure protection which you are providing to your family. But again, if you ask me technically what the financial planning books will say, that you have to buy health insurance first because that's a living benefit. Only if you are healthy can you pay your term insurance premium. So yes, the first thing is buy a health insurance and then immediately buy a term insurance and then look at making any other investment decisions or choice. So Vignesh, also going forward, people asking that you have a very successful campaign which is going on, which is Future Fearless. So, saying what's the thought behind this campaign?
So, Sanjiv, there's been a lot of thought behind this campaign. I think it's basically aimed at children, child plans. We are one company which has child plans across all platforms: ULIP, traditional, par, non-par. So it's basically encouraging parents to harbor ambition in their children, to be future fearless. They can dream and they can achieve what they want, and the parents should provide the right financial backing when the child decides to do what he wants and when he wants, because this is basically unleashing the ambitions of a child, to be future fearless, to think about the future. We have the young, for example, we have the young Sachin in the ad showing playing with the ball, and he becomes Sachin Tendulkar. So every child can aspire to be fearless about the future, not to be scared about the future, and to realize his dreams through hard work. But they also have to be backed up by a lot of financial commitment the parents have to do. And this is basically promoting a child platform, and it encourages parents to harbor the sentiment of being fearless among their children, so that they can dream and achieve what they want.
Very amazing campaign, amazing campaign that, you're making your future of your child fearless, and which is something all of us aspire to do. This is something, I think anybody who's got a child, till you don't have
Thank you.
children,
And I think our
about it.
marketing,
But the moment you hold your child for
yeah,
the first time, then you think, okay, then you get into that father mode or the mother mode, that I need to protect my child. And protecting your children, the most important thing is having a life insurance. I see so many bad stories, especially
absolutely. And I think
during COVID, where people have not bought adequate insurance, and they love their children. And I said, okay, oh, my God, what have they done? So Vignesh, taking this question to the next.
so. If you have the backing of a strong insurance plan, the financial commitment, I think a child, then you can encourage your child to dream big and achieve big. And there's also a message to our employees in this Future Fearless campaign. It's not only to our customers and customers' children. It is for our employees to be future fearless uh, in their work, and that makes a difference to the company also. So there's a very subtle message which is given to our employees to be future fearless, to take your chances, to work hard, not to fret over the future, and that will take the company forward.
So Vignesh, also now taking it to the next logical thing, people say, how much should I buy insurance for? Okay, so what should be my human life value? What is the sum insured? Is there any hack available there? So how would you answer this question?
I think there's no short and easy answer to this question. The thumb rule is the thumb rule of how much insurance you need, 13 to 15 times your gross salary, current gross salary. But I prefer a much more scientific, detailed needs analysis, which your advisor should do with them. The first thing you should cover is the liability you have. Whatever loans you have, could be a car, could be a house, could be a personal loan, could be a credit card. The first thing you should do is cover that. Then, once you cover that through a term product or reducing term product, then it depends on your dreams and aspirations going in the future, your children's education, your children's marriage, your retired life, what kind of corpus you need at 50, at 60 to fulfill all these requirements, and how much investment you have to make in what kind of product to achieve that goal. So I think how much insurance you need is a detailed conversation one needs to have with his advisor. But the short answer would be, the first thing you need to do is cover all your obligations, financial obligations, and abilities, and then you can look ahead and say, what kind of life do I want to lead? How do I want to educate my kids? How do I want to get them married? What kind of retired life do I want to lead? And then you can plan accordingly, one step at a time. But the first step is to cover your obligations.
Yeah, So I think Vignesh has answered it amazingly well, guys. You need to do it technically, but if you were to follow a very simple rule, if you are married 10 times your income, then 5 times your income for every child. In addition to that, you add your loans. Because, this is the amount of money they will need to live a life as if you were given the interest rates of 6%. You can do the calculation. That's the kind of life they will need. The amount of money they'll need to live a good life, or the kind of life they're living currently. That's the basic rule. Uh, there is a question by Kishore Panda that what does Bajaj Capital do? So, Bajaj Capital is the oldest wealth management company in the country. We have served over 41 lakhs. So we do investment plans. That's our business. Loans are from Bajaj Finance. That's a separate company. So just clarifying that. Also, there are some other questions which are relating to Bajaj Finance. That's a separate company. Now, Novena is asking this question: what are the terms and conditions customers forget to check before buying a insurance policy? Vignesh, what would you like to say here?
I think not many customers read an insurance contract from every word of an insurance contract. They just sign and they trust the advisor. But I think there are some terms and conditions that the one of the basic things the customer should do, besides the relevant questions to the life insurance, depending on what your life goals are, depending on the claim settlement ratio, depending on the fund. But these are the basic questions. But the thing you should but the thing you should be very careful about, very careful about an insurance contract is the proposal form. I think the proposal form forms the basis of a contract, an insurance contract, and I think any disclosure on the proposal form, you should absolutely know it and agree to it, and you should fill up the proposal form on your own. You should never ask the advisor to fill up the form and just sign where required. There is the health declaration. There are various static and non-static questions asked in the proposal form, and that forms the basis of the contract. So there cannot be any misrepresentation or non-disclosure in the proposal form, because in case that happens and the insurance company investigates the claim, your could stand to be repudiated or rejected. So be very careful about the disclosures you make in the proposal form. And the rest of the questions, if once you fill up the proposal form correctly, I think the rest of the questions can dance around what claim settlement ratio mean, what the fund performance mean, what the brand means, and you can do a bit of research. But the important thing here, short answer would be to be very careful when you fill the proposal form. No, you should not allow any non-disclosure or misrepresentation in the proposal form.
Yeah, so there's basically, I'll add to this what Vignesh has said. Insurance proposal form is the most important document you need to be clear about. And don't lie there. Well, there the people say, "Agar aap ye likhoge, if you write this, you will not get insurance, or you will not." That doesn't happen. A lot of time, the underwriting is quite flexible to take care of the problems. Or you may end up paying a small extra premium. At least you're sure that the protection on my cover is going to be there. My claim is going to be paid. So that's very, very important. You know, so going on to the next one, Vignesh, your mid-cap fund has been a superstar performer, and which has been giving all the mutual funds run for their money. So what is the reason behind that? That typically insurance companies are not known for their fund management capability, and you have done exceptionally well there.
I think Sanjeev, thanks for that, and I think the credit and the credit for that goes to our investment team. I think we have a very conservative and prudent and judicious approach towards not only mid-cap funds but all the funds that we manage. And I think all credit to the mid-cap team, also the investment team, for the way they've managed the mid-cap fund. I'm aware of the performance of the mid-cap fund. Uh, so it's all credit to them. It's all credit to the investment and investment philosophy and style. And it's not only in the mid cap funds, and the other funds have also done well. possibly, probably not as well as a mid cap fund as compared to other funds, but it's a good disciplined, rigorous, judicious, responsible investment strategy and philosophy we have.
Yeah. So also now, asking this question, people asking that between LIC and private insurers, whether how should they choose or should they choose or not. Let me tell you guys, see, it's a game of brand. Life in LIC is an amazing company, but they have only a limited number of products, and the more loyalty you have, the more premium you'll pay for that company. It's an example like earlier, shampoos were only available from three people or two companies because they had to build brands. Today, with the advent of Amazon, there are 100 and maybe few thousand brands of shampoo because you can just look at the rating and choose. So it gives you much more choice. So private insurers give you much more choice. It's a highly regulated industry, so your safety is very, very high. And these insurers, in order to compete with LICs and others, and LIC is an amazing competitor on life. So they try to improve on the customer service, improve on the experience. So, my point is that keep your eyes open, go for the best solution, go for the best product. As Vignesh had already said, look at the brand of the company, look at the claim settlement ratio, and you should be fine. Okay, go for because let me tell you, a 99-year insurance. Today, people buy term insurance till 60, 65, 70. But that they will definitely live past 65, 70. Although their liabilities will come down. But today, when you buy a 99-year term insurance, you're creating a family legacy. Your money you want to give to your children, you're giving via the plan. So these type of products may not be available with LIC, although they had a whole life product which was more expensive. So you have to look at where you get the best value, and that's the most important thing. Is anything you like to add here?
Yeah, I think Sanjeev, you said it all. It's a very well regulated industry. The customer interests are paramount, or will always be taken care of. We are a very judicious regulator, so there's really no need to worry. You should choose your company depending on the products they have and how they fulfill your needs and how they will fulfill your needs. You should not be bothered about LIC or private companies. It's a superbly regulated industry, and customer interests are paramount and taken care of. Don't worry about that.
Yeah. So also people are asking what are the tax benefits available there. Section 80C, Section 1010, what do they mean? But they're asking why has these tax benefits not gone up, or why has nothing been done by the government for life insurance companies in such a long time? Are they not important, or is the life insurance company not advocating to the government? So I'm mixing up multiple questions. So
Yeah, so I think tax benefits, it's been a long-standing demand of the life insurance industry that tax benefits should increase. Section 80 triple C is a very cluttered bucket. It's got interest on housing loans, EPF, PPF, PF, life insurance, some national deposits in nationalized banks, and that limit has not changed for many years. So there's been a long-standing demand to increase that Section 80 triple C limit. There's also a demand from the life insurance industry to make pensions tax-free in the hands of the pensioner. There's also a demand from the life insurance industry from the insurance industry to uh, increase the health premium you pay from 25,000 to about 70,000, like especially after what we've gone through. But the moot point is all these are good things. All these are good things when there was a little or less awareness about life insurance in the country, maybe say 20 years back. But today, the awareness of insurance in the country has increased manifold. Everybody knows, especially after the last 2 years, that they should have an insurance policy to protect their life and also health policy. You should buy insurance for the protection it gives you and the family. You should not buy it for the tax benefits are nice to have, but that should not be the only reason you buy insurance. Uh, uh, you should buy insurance for the core need it satisfies, that is, protect the family against any untimely, unplanned event which happens. So that is the reason. It's just like you get a tax deduction on your housing loan, but you don't buy a house because you get a tax deduction on the interest you pay. You buy the house because you need a roof over your head. And that's exactly why you should buy insurance, because you need protection.
Yeah, very well answered, Vignesh. Very well answered. So next is a question by Pradeep Negi. He's asking, should I go for a term insurance first or a investment guaranteed return policy first?
I think we've already, Sanjeev and me have already answered the question in the course of this talk. I think the term insurance is the first insurance you should buy. You should cover all your obligations, all your loans, all your financial obligations, and term is also the most inexpensive form of insurance you can get, which cover which can protect which where you get it's the cheapest form of insurance to get. So you should buy insurance first. It should be the first product you should buy in your insurance basket. And then as your salary income increases and as your dreams also increase with your salary income, you can choose to buy other plans. But term is the first port of call. Should be for everybody.
Very well said, Vignesh. Also, next is a very interesting question by Namrata. She's asking that AGS has gone through a tough, challenging times in recent past. So, as a CEO, how did you lead the organization during this phase to emerge as successful on the other side?
We just did what's your name? Vinamtra.
Vinamrata.
I can't read. Vinamrata. So there's just two things we did. We went through a challenging time, and I don't want to talk about it because I don't want. I want to keep this as crystal. And then after that challenging time was over, we fell into the lap of COVID, which lasted for 2 years. But there are only two things we did in these 4 or 5 years. One is there were obviously things we couldn't control. So I told my team, let's not fret about things we can't control. Let's control the controllables. There are some things within our control. Let's try and do our best and control them. So that's what we did day in and day out. The second thing which I did, and I spoke to my team, was in these challenging times. I think whether times are challenging or not, I think the only differentiators in the insurance business are the people. Everybody has the same products. Everybody more or less has the same processes. It's the people that makes the difference. So, especially in challenging times, we wanted to make a happy, safe, secure place at work where employees could come, have open, free, honest communication, and work fearlessly and express themselves. It was like we wanted to create a home away from home for the employees where they felt happy coming into work. And if people are happy coming into work, you control the controllables, challenging situation or not, you will do well. So these are the only two things. We wanted to make this a great place to work. I think we have come some way in doing that. We wanted to make this a thank God it's a great place to work. We wanted to make this. We wanted people to enjoy coming here working, and we said we're not going to discuss what is not in our control. We are going to just focus on what is in our control. And I advise my employees to do that even now. That the challenging times over. There are yet some uncertainties. Let's not think about them because there's no point. There's no control over them. Let's control the controllables and make this a great place for people to come and work. I think
Yeah,
two
I think
simple things,
amazing,
Sanjeev.
amazing answer, Vignesh. So, summarizing that answer, focus on the company. Don't focus on the problems. And when you focus on the companies and doing the right things, the problems will go away. A lot of us get tied down to temporary problems. We have to understand every problem is temporary, every bad time is temporary. But if you're in the right organization with the right team, putting the right focus, these things will go away. So, guys, since we are doing that shorter format, Vignesh, any last message you'd like to give to our viewers today?
Yeah, my only message is get yourselves insured. It's never too late, and secure
And
yourselves
definitely,
and be future
we'll
and
look
be
at
future fearless. Be future fearless. Yeah.
yeah, so guys, I think a very potent message, and that shows he is the CEO. So he's saying, get yourself insured And obviously, he's saying that look at IDBI federal products also. I'm sure they have some incredible products. So, guys, thank you for joining us on this new shorter format of FINtastic Talks. This is an experiment. Please give us your views. How did you like it? Do you like the 1 year for 1 hour format? Do you like the half an hour format? What is better? Or there are a lot of questions on the comments which we could not take up. But please be sure that we'll get every comment answered, every question answered. And if you have anything, any thought in your mind, please do put it in comments. And do keep joining us on FINtastic Talks. And thank you, Vighnesh, for taking out time at the beginning of a new year to be with us. And I'm sure our viewers had an amazing time listening to you.
Thank you, Sanjiv. Thanks for having me here. Thank you.
Yeah. Thank you, guys. Thank you.